Okay, so this is module 4, and what we're going to look at is the hourly chart, adding support and resistance, and the longer term direction. And also we can start to see when it's a good idea to hold a trade when there might be a better risk reward. So as I said, we're going to be looking at the support and resistance. What I'll do, I've just got a blank chart ready, and I'll add just the levels nearby for now. And we'll look at the simple support and resistance. And as I say, we're going to look when it's better to hold for potential larger gains. We can use the hourly to determine this. And we can also see when the market's possibly ranging, as it has been today, and then when we can play low levels closer together, it will give us some indication of this. Okay, so I'm just going to get the Pirate chart up here. So this is an hourly chart. Obviously we've got the Euro hour one. All I've got on there, we've got the normal stock. I'm just going to, for a minute, I'm just going to make that one smaller so it doesn't divert our attention for a moment. I like to zoom out a little bit so we can see a little bit more recent price action. And then what I'll do, I'll just take from the high to the low, and we'll start from the bottom and work our way up, adding in support resistance lines. So firstly, what are we looking for? We're looking for areas where price has reacted either as support, so this would be classified as support as we moved away, or resistance, so this area has been classified as resistance as we failed to break through and push down. Now, there is always little signs where there's going to be support, potential selling or buying into the market. We can also time that with the hourly when could be potentially good risk reward trades, and when we'd look to add positions, when it can be a good idea to add more than one trade and be a little more aggressive. So we can see the recent high that we made, that was on Monday, wasn't it? When we come up after we had a small gap again, and we come up to this high. We did close this gap that we had last week, but regardless of the gap, that's still an area where we've had previous support and also previous resistance. So it's a past area, and that's where the price did change. I was starting to make new recent lows. Now we'd have to go further onto the daily to look at potential support. But we can see where we've had support in the past, this area, and before that, this area here, the 890, that's been in play quite a lot, and that's been in play for us today. So you can see just putting the crosshair on the old support has become our daily resistance for today, and that's where price failed to get above. So we want to mark these lines up on our hourly chart. We're not going to worry about tying them in with the grid lines in the 1 minute. All we want to do is look for as many points touching our support resistance as possible. And look, it's going to be a rough area, it's never going to be to the pip. But then what we do with the grid, we look for the nearest grid line to our potential support or resistance, and that's when we look to take the trade. So firstly, we'll just start from the bottom. So we've obviously got the 30 line at the bottom. So we put that line in there, that's where we've again hit today and found support just below the 30, so we'll mark that line up as 29. And then we've got an older line. Again, when we start talking through the lines, these won't be as strong because they've been broken more times. But you see, this is where we had the previous support. We have had reactions on this line, but this wouldn't be such a strong level as the lower one. But we'll still keep that marked up on the chart. And then next, we've obviously got this one. This is around the 90. So we're going to look. See what we're doing, we've got 1, 2, 3, we've got a tail poking through there, and we've got the majority of the bodies there on these candles, the majority of the bodies there, and we're touching there, a couple of tails. You can see, putting the line at this point, we're getting more touches. It's so roughly in the better area, and this is at 86. So when we tie that in with our grid levels, we'd be using the 90 on setting 1. Let's get our next one, which will be, you can see again, try to tie it in with as many hourly bars. You can see all the points that we're touching here, and look at that, another one you should start to see where we're going to put them. We're going to put them in the most obvious areas. Obviously in between these levels we can just use our grid lines, but these are the lines where we can potentially get at least a bounce. The reason we like to use these lines, don't always act as a complete turnaround or a reversal. They can do if we look at our indicators. We can look at where there's a higher probability that we're going to turn, but we usually get at least a bounce of around 10 pips, and we know the way we manage the trade. We start to move the stop after a 10 pip move. So a lot of the times we can still gain a position with having very little risk when we're using these key levels. We won't look to add on every occasion. We'll go into that more shortly. So hopefully this is just from this top move to the bottom. I've added on the recent levels that we'd use. The higher levels and the lower supports at the top and the bottom would obviously be stronger levels. And again, when price is pulling up, we can start to use these old levels also, which is, the more times it's been hit in the past, the more likely we're going to get some sort of reaction. So it's very, very simple. When you zoom the hourly chart out, we can just look through and see what areas have had the most sort of reaction, whether it be buying or selling. When we start moving down as we are now, making new lows, we also have to zoom out. So you can see the 4 hourly. What I also do is, you can see at this line here, I'd have this as a stronger level because it's also been a reaction on the 4 hour. So we can then make this line, just right click on the line, and we can then make this one a little thicker, just so we know it's actually been in play on the 4 hourly also. Possibly this one. That's the strongest level that we can see on the 4 hourly. So we'll just make that one the thicker line, and then also go into the daily. The daily is where we'd have to look for the next potential support. So we can see we've got this low here, which would be potentially the next level we'd be looking at. Now it's very close to the line. And then stronger levels, as you can see, we've got these two lows. That would be a stronger daily level. Actually, that should be a little bit higher. So we get in them. See what I've done there on the daily? Hopefully you can see that. Just moving the line up, so we've got the majority of the wicks coming through, but we're above most of the bodies. That's where we want this line to be. So that would come in at the 690. So that would be at the next potential stronger level for the daily. So we'd make that one a little thicker also. Just that one up to the daily line. And that's it. I mean, we only really need to zoom out and look at these levels. When we're using the same chart as I've got on my daily FXDD, we can leave the old levels in play, and if they're still working, if they're still reacting, we won't delete those lines. So in time we'll build up levels this way, but it's very, very simple still. When you come to the hourly, we just should normally have between 2 and possibly 4 levels that might be in play during the day. Today, as you see, we've had the 90, which I talked about this morning. I didn't quite reach it the first time of asking, but when our levels started coming into play, we did hit that 90, and that's where we found our resistance. So we'd already be looking at this as a potential area to turn, as we spoke about this morning, and also the recent low, the 30. That's where we found the support. So we can see straight away both of those levels have had a move in between of around about 58 pips to the upside, and so far to the downside around about 40 pips to the 50 level. So you can see both of these are recent ones, but we've already got areas where we can see this was potentially going to be the resistance. So that's why we spoke about that level today also. So you can see it's simple. It's not rocket science what we're looking to do, and we're just looking then for our entry technique for the reversals to come in at those levels. So that's a simple way, and like I say, we first look for a bounce, so we know these are going to be higher probability levels. So this is where we use the reversal entry. So as we're coming up, at this point we can look for from a more aggressive area to short. So once we touch that 90, we can short. So we're going against the short-term trend, and the same with the support. That's where we can first look to take a long position. Now we know we're going to get a bounce on these levels, or we know there's a higher probability we'll get a bounce, so we're going to at least get to the chance to move our stop to break even and manage the trade. But there is also times when these levels can be a lot stronger and we can look to hold for more profits. Now if we use let's just look at this recent high that was made early in the morning. So we can see we got up not quite to the 50 level which we had on our chart, but very close. But we were hitting this support resistance line, this previous line where we've had to the support here. Now this is why it's potentially a good idea to hold these. When we're also getting overbought on the hourly, when the hourly stock coincides with the support resistance, especially a high or a low coming in, that's going to be a good idea that we could also build a position. So we did hit this a couple of times, and on the third time of asking, that's when we had this nice move down. But getting in the overbought or oversold on the hourly, we're going to get a lot bigger move from the hourly chart obviously than the 5 minutes. So when we're timing these reversals, and when we start to see the hourly actually turn also, so when we start to come out of the overbought in this scenario and it starts to go in our favour, that's when we can potentially start looking for bigger levels. So from the short here we can first look for the 970, which obviously was a 70 pip move there. And again, on the first time we broke this previous low here, which at the time was actually 40. The first time we were again oversold on the hourly, so we overshot. Remember we talked about overshoots before. What the overshoot is if we're getting our recent low or high and we stretch to our next level. In this case it was the 30. When our grid's in play, I use these levels as the overshoot, and when we're overbought or oversold on the hourly also, we can again look to take an aggressive entry from these levels. This one did move up in the end around 60 pips, but obviously a bit more choppy. That was against the overall trend, the overall longer term trend, which was to the downside. But still, you're getting better moves away once we start crossing out. We didn't start crossing out until this area, but going back, this was a new line, so that one wouldn't have counted. But again, we can see that's a possible overshoot area. So our previous low was the 910, and then we got down to the 890. So again, that's an overshoot trade. We've overshot one level, but you can see the hourly then is oversold. And once we did find the support, and once we turned out on the hourly, again we're getting a nice move, and we're going all the way up to this next key level, which is over 80 pips profit. So this is when we're trying to type. So this is when I'm advising in the morning to look for a key levels where we can possibly look to build a position. Unfortunately, a lot of the times it has happened in the PM sessions, but when we're running into these levels and we're getting everything in our favour, that's when we will want to look to hold for a little more profit and to come to the next key level. So we broke up through this particular trade, breaking up through this level here, the 930, and then we've got the next target at this next stronger level. And also, if you see, looking at the hourly stock, that's also when we started to run into the 80, so that would have been a great target. This happened early hours in the morning, I believe, that move, but just to show how we can use our levels along with the hourly, and then timing it with the 1 minute chart, how we time our entries from our levels, and that's when we want to look to add a position and hold. So we've done that a couple of times. We want to be looking to do that more when we get the opportunities. Again, still it's been a little choppy at this point, and then we move down. We're going to talk about divergence later, but when we're turning back up, again, firstly it's a key level. We're hitting hitting a key level. At this point, this is the third time we've hit that level, so that's when we should be starting to draw that 890 level. And once we do turn away from that level, once we've broken the next key level, which is a 930, remember we did speak about that last week, we're pushing up and we're pushing through another level there. Again, these are much bigger targets, over 100 pips there. Let's try and time the 1 hour entries with the overbought and the oversold. So I'll be talking about that more in the room, but there was, I think it was 2 weeks ago when we first hit the 310 level. Actually, it might have been longer than that. That was the last really decent position I built. It may well have been here, I think. Yeah, I think possibly it was here. Well, we had this level marked up, and we was also looking overbought when we first got to it. Yeah, I believe it was this one. It may have been the time before when we hit it. Anyway, we can see that when we were overbought, we've had the overshoot and hit that overshoot area of the 130, but we've been overbought there on the hourly. We've made a new high, and we've quickly turned and we started taking out that level. So again, that was another key level in play where we turned back. We're going to talk about divergence on the next one, but on the next module, there's quite significant divergence there from that high. So overshooting these levels, and we can look to add the short. I don't think that was the actual one. It might have been the 110. I can't remember now. But when we're tying in these overbought areas on the hourly, and we can see now we've got the hourly indicator on our charts. We can also see, just looking at the one chart. So earlier this morning, before we started, remember I was talking about the 890, so here's our level. We just started going into the overbought on the hourly, so we can look for the possibilities of reversals. We would have had a really nice level to play there. We didn't quite hit the 890 the first time, but if you look, when we hit that later on at this point, again had a nice move down from it. But we were a little shy, but using the cross on the hourly, we have started to move up a little higher, but we've been in the overbought, and we can look at that key level. That was our nearest key level, the 890, for our first possible resistance. So what we can do when we get to these levels, as I spoke about earlier, we can take our first initial aggressive entry from that level, and when it moves in our favour, that's when we can look to add, and that's when we can look at the possibility of holding those trades for a better risk reward. We can see how the price moves and how the hourly moves away from the support and resistance, whether these trades are worth holding, but they're always going to be better at risk reward. Once they actually turn, as we see here, the 5-minute turning away, once they actually turn, we tend to get better moves from these levels once they're going in our favour. So remember, we can play any of the key levels, but when we're looking at the hourly also being in the overbought or oversold as we approach one of these levels, that's when we can look at the possibility of holding these trades. And we'll later look at the divergence. We'll look at divergence, as I say, in the next module. But also when we're making new lows and we're getting the divergence, again we can look at potential reversals. Now, we don't, because we're using the hourly, it's a little bit different. We wouldn't know the divergence straight away, but because we're playing the potential key levels, we can then look to hold this. And once we start seeing the hourly cross over, it's not until we've actually had the hourly close and start crossing over, we can look at the potential of holding trades using this technique also. So it is handy, as I've just put the module 1 on now to load up the hourly chart. It is handy to look at the hourly chart like this also, but we have got I have the stock on our entry template now also, so we can look when the blue line's crossing up through. It means that we're starting to look to the upside on the hourly, so we can look at favouring long positions or favouring holding long positions, and when we cross back over, we can look at favouring to the downside. Now, it's a good example today when we're quite flat. When the hourly chart is going flat, we can see it very well on this indicator because it's zoomed in so much. Once we're getting that flat and we're not getting any movement, the lines aren't getting wider apart, so the stronger the trend, the wider these two lines will be, and you'll really see it on our 1 minute entry chart, and that's when we can look to just aim for longs or shorts. Let's get an example because we know we had a good trend the other day. So when we look, so when we started to get very wide on the stock there, we initially took this short, but again, when we're pulling back here, we can still look to take shorts. We can still look to favour shorts. So when we're coming back to our level, looking to enter shorts, as at the time, this is an hour behind. This will be an hour behind. We'll see this live, but when these start getting wider and we find a little bit of support, we can sometimes against the trend be wary and not take the long position, but just look for the price to come to our next level and then look to favour the shorts when we're opening up and going back into the overbought. But these lines were quite wide when that move happened, and it can just signal us to favour the stronger trend and to wait for a level to come to us and then look to short or long. But as I say, when we're very flat like this, that is when we can look to trade our levels. We still need the 5 minutes to get the right entry. So the 50 here, we did hold this trade earlier today. No, sorry, this was the one after the room. You see when we hit this 50 again, we're looking quite flat still on the hourly, and as we start turning up through the 5 minute, we can then look to play the smaller ranges when we're looking quite flat. The 5 minute wasn't so great this afternoon because we didn't get in the overbought or oversold too much, but when we did, again we had a nice drop earlier once we got into this overbought. So we're coming back through our level there, and again no real market direction, so we can look to just trade the signals from the 5 minute when we're very, very flat. But when the hourly starts to open up a bit, you will see it quite clearly as it's happening. As I say, now we're still quite flat at the minute, but when it opens up, we can just look for pullbacks and to favour either long or short positions depending which way the hourly is crossing, rather than taking trades against the stronger trend. So we can use that as a helpful tool to tell us the overall direction. Let's just try to find a couple more examples to finish this half an hour session. There was a very good one, I can't remember what the date was. I mean, again, we can see an example there. We've come out of the oversold, coming up to the overbought, and you can see where this previous support was. Even that slightly higher. Getting into the overbought, so that's where we can possibly look to take aggressive entries. And once we see once we actually see it turn in our favour, that's when we can look at potentially holding that fast position, so we can lock in profits, give that trade a little bit more room, and look to hold these positions. And again, the next level we would have had at this point was here, as you can see, the previous low. And when we start breaking through these, this is when we know we can let the trade run. So once we started finding some support, we could use this as the third area on the 150. Again, we've come up, we've tested this previous support, and what do we see here? We see that we're getting overbought just as we hit these levels. So this again would be a key level for us. So we can look to take an aggressive trade at this point from the 150. So the 150 would be our nearest level. So we can look to take a trade with a 10 pip stop as we're hitting that. And this would be a very nice trade to build a position from. We can look to enter a couple of entries and hold. We can see how well that's worked there. That's a good example. The previous support here turned into resistance, and we had the 1 hour very far into the overbought there. So this would have been also a very nice potential reversal, and that's where we'd be looking to hold, give the trade a little bit more breathing room and hold and possibly build positions. These are the areas we want to look for. So we will go through this every day, and the first thing that I'll do, as long as we're not too close to an entry, is look to go over the hourly, and we'll look exactly what the nearest levels are and which areas will potentially look to hold for a little longer. So that's the first thing that we're going to do every morning. But it's very, very simple. There's nothing, we're not doing anything complicated with our support resistance. We're just literally looking where the recent hourly bars have had the most reactions, and looking to put our support or resistance line in there. And once we hit the overbought or the oversold on the hourly on these key levels, that's where we'll look to hold for potentially larger gains. And then we'll be able to see it on the hourly as well. So you can just see now, as we're starting to this is still fairly flat, but you can see as we start moving in a certain direction, the lines start to spread apart, especially when you've come out of an overbought So here, again, looking at that, especially when we come out of this, at the time, because this is always just an hour behind, once we're coming out of this overbought area and we're getting wider, we'd be favouring to hold this, and we'd be favouring to get very close to the to the 20, to the oversold, so we can come all the way down to that 990 level from here, looking for larger targets. And that's also when we can look at trailing the stop, using the trailing stop and the grid. Once we're coming out of overbought and we're looking strong, that's when we can look at trailing the stop. When we're more range bound, we want to be giving the trades a little bit more breathing room sometimes between our levels. But when we're strongly moving, in this case to the downside, and we're starting to open up on the stop, that's when we can trail the stop with each level. So we'll trail that one all the way down. In this case, it would have been stopped out back at the round number. So hopefully that makes sense. We will talk more about the hourly indicator on the 1 minute when it's live, because it is easier to see when we start opening up trades live. As you can see now, this hourly indicator here just started opening, but we'll see this start crossing as well, and it does sometimes give us a little bit more of an early warning. I've been watching the hourly, the stock on our entry for a while now, and we can see more clearly the potential crosses sometimes than we can on the hourly chart either. So it's a good tool to give us a general direction. So that's the basics of what we're going to do on the hourly. Every morning we will have a quick look at the chart and look at the nearest levels we've got in play. And again, this is where, when we're putting it all together, and I'll show you using some of the alarms, when we're getting close to a very strong, let's say for instance we're getting back up towards this high, if we've been crossing the 50 around this area and we're getting up towards the high, what I'd look to do is put an alarm on the stock on the 80 level, which we'll talk about on a different module, and also put the alarm on the key level just below, because we want to be alerted when we're just getting to a potential key level. But we can also set that up so we can look for smaller trades during the AM session, and then any key levels potentially get hit in the afternoon, we can have it all set up so we do get alerted. That's what I do when I'm at home as well. Even when with the little one, I'll set the laptop up out of his way and just set the alarms at any potential key levels, and then really I'll only look to trade those levels. I won't be interested in any of the smaller moves and just a potential larger move from a key level. So we'll look at setting the alarms from the levels, and that's what I'll be talking about at the end of the morning session. If we've got any potentially good risk reward areas coming up, we'll look to set alarms and take advantage of these where possible. So that's the end of module 4, the hourly charts.